I'd like to welcome Matt Gertken, Chief Strategist, Geopolitical Strategy and U.S. Political Strategy from BCA Research, a leading global investment research firm. Matt oversees BCA's coverage of market-relevant policy developments around the world. Previously, Matt worked as a senior analyst at Stratfor. BCA's Geopolitical Strategy service provides market-relevant macroeconomic research with geopolitical risk analysis, resulting in trade recommendations for global investors. Matt Gertken, welcome to the show. Great to have you.
Thank you very much, Alan. It's a pleasure to be with you today.
Excellent, excellent. And as we always like to do, we want to have kind of a general conversation about our topic, which is geopolitical analysis. We have a lot to talk about, so I thought we'd get right into it with, a question, more of a general question, which is, right now, for the sake of the world and global economy, more specifically, we would love to see our two largest economies, China and the US, getting along, working together. However, based on the back and forth rhetoric, the tit for tat threats, the distrust between the two countries, I guess one would say these two countries perhaps aren't getting along as much as we would like. What's your take, generally speaking, on the state of the US and China relationship?
Well, first of all, Alan, I think your approach is correct that from an investment point of view, what we want is peace and prosperity. That's what investors want. That's what would enable a growing economy. That's what enables growing corporate profits and a free flow of capital to find the most efficient uses and generate better real returns. So the world is sort of, from an economic and financial perspective, the world is sort of looking for the US and China to form a détente or a reduction in tensions, because we've seen that their strategic tensions have exploded in the wake of the Great Recession. And specifically in 2014 and 2015, we saw the relationship break down. And then the election of Donald Trump escalated to an outright trade war. And we see today that the Biden administration has co-opted Trump's trade war tariffs, as well as expanding export controls that he initiated on high-tech equipment. And these things are going to continue regardless of whether Biden or Trump or any other Republican or Democrat gets elected in 2024. So what would cause that détente? What would cause the U.S. and China to have a new mode of operating? Well, they would need to basically face the brink of an outright conflict, of a war, and recognize that that's not in their interests, and then back away from that and do confidence building measures. Some would be on the military side, others would be on the economic side. But I think if we want to cut to the chase, you need the US and China to sit down into a room and agree first that they will not attack each other's economies. They're not going to try to inflict a recession on each other or harm each other's ways of life. That would obviously escalate the conflict. They need to agree not to do that. And they also need to agree not to have a war over Taiwan. And China's view on that has been the same for a very long time. The Communist Party has shifted under Xi Jinping as well to be more aggressive, ultimately, on insisting on a resolution to the Taiwan issue. So there's not a lot of optimism about those 2 points of agreement, but it is possible over the coming years. The sad thing is it'll probably get more difficult first. We'll have bad news before good news.
So you mentioned a whole lot there, and I kind of a few points I wanted to touch on. Trade war, you mentioned that term. Do you think there's a trade war between the U.S. and China today? Obviously, the U.S. just introduced some new tariffs on Chinese goods coming into the U.S. Obviously, the tariffs on electric vehicles went up 100%. Do you think there is a trade war right now, and how is this affecting the North American markets?
Well, yes, I do think there is a trade war, and some of these terms can become, very loose, very fuzzy. They can be thrown around. Well, what we're talking about is a scenario where the U.S. and China engaged in very deep economic integration and trade and investment flows, particularly since 1979. But it really escalated in the wake of 1992, and the U.S. allowed China sort of quickly to enter the World Trade Organization in 2001. And then it started to break up again, like I said, after the recession, and especially when we saw that the result of the Great Recession was that the American consumers were not levering up as much. They were not, borrowing as much and spending as much as they used to on Chinese exports. And China, meanwhile, had sort of reached a peak in its export share of the economy and started to devote more resources to the property sector. And so those are big structural changes. And the reason why the U.S. engaged in China's economy was to peel the Chinese away from the Soviet Union. When the Soviet Union fell, then that relationship just continued to expand because it was positive for global economics, and it also seemed that it would create a coexistence politically and enable military and strategic tensions to be put on the back burner. And now we see that it didn't really succeed in doing that. One reason is that the Chinese did not engage in the degree of structural economic reforms that the West was ultimately expecting. The West wanted greater market access to China. And with the digital companies that the US, the software and services that the US was providing in the 2010s, China wasn't really letting those have access. It was worried about the effect on its society. And so we saw that the Americans and the West more broadly were disappointed with the amount of market access they were given. So there is a trade war, and it's because the engagement process failed. And that's because specifically China did not engage in the extent of structural reform. And then the Americans reacted very badly, including to the fact that they had deindustrialized their economy.
Valid points and great, I guess, lead up to perhaps a question regarding the companies themselves. A lot of companies obviously have a presence in China. Apple, Starbucks, some of the biggest chip makers in the United States obviously have a pretty big presence there. What would you say to these companies? How would you advise them? Are there risks going forward for continuing to have as much business in China as many of these companies do? And what would you say to investors that are investing in companies that have a large presence in China? What do they need to take into consideration before they make that investment? What do these companies need to take into consideration? Should they be diversifying away from China at this point? Or do you think that this at some point will get better, the situation, the environment will get better, and these companies are okay?
Well, a few things. First of all, the primary financial market impact of this trade war, it's involved a lot of different twists and turns, but generally speaking, we've seen U.S. equities have not suffered. We're now several years into this process. It's a multi-year geopolitical trend, and the American market continues to thrive. The U.S. continues to have an innovation machine. The U.S. has a lot of capital, and foreign capital has fled to places like the United States, even in the context of higher inflation and higher interest rates, and a big ballooning of U.S. budget deficits and debt. So what we saw was an exit of capital, first of all, away from Russia and Russia's sphere of influence because of the Ukraine war. But also we have seen an outflight of capital away from China and Hong Kong. And so, in other words, it has not paid off for China to pursue a policy of economic sort of basically they didn't want to delever at home, but they definitely didn't want to lever up too much and create a bubble. So they sort of saw a slow decline in their property market as a result of constraining their credit growth. And this disheartened basically the property sector and also discouraged households, which have a lot of their wealth in the property sector. And meanwhile, the U.S. was still offering very competitive and very productive and innovative companies. So capital has flown to the U.S. I think there's a lot of speculation about how that could change. But in order for that to really change fundamentally, China would need to undertake some of these reforms that I'm talking about. They would need to empower their households to consume more so that you'd have a consumer-driven economy in China. And then that would also outside powers would need to have access to that consumer market so that then they would have a reason to hold renminbi or renminbi denominated assets. And you could create a virtuous circle where exporters could export to China, save their savings and recycle them into Chinese financial assets and diversify away from the U.S. But that's really none of that is happening, and there's not a good basis for that. China still has a closed capital account, and they still refuse to transfer wealth to the households. So basically, this is an environment that's beneficial for U.S. assets, and that can change at some future point, but it's not changing right now.
Yeah, so right now, I guess all these companies that continue to expand, Starbucks and many others, I guess for now, they seem to be okay.
Well, look, I mean, the ones that are in China, that are based in China, and that are not providing technology and know-how that China needs, they are very vulnerable because when China retaliates to U.S. trade war measures, it can retaliate against some of those companies and limit their market share further. So it's not necessarily good for companies that are invested in China. And to your point about, what should investors do? Well, they want to look outside to other emerging markets because this conflict is driven by geopolitical factors. The need for security, it's not going away, and that means that the market access for U.S. companies will be limited. And other Western companies face a very similar dilemma.
and their stock price sometimes behaves. It doesn't get the multiple that other companies do, I guess, that are no not so reliant on the Chinese markets. I'm kind of changing pace a little bit with my next question. It's something that is in the news all the time, and I chuckle sometimes when I read about this. But in your opinion, does the U.S. have a good reason to believe that China is trying to influence Americans in general, how they vote on their elections through avenues like TikTok or other ways? Is the U.S. correct to think that they're being spied on, or is this just the U.S. being, I guess, scared or paranoid or whatever you want to call it? Do they have reason to believe that people in America are being influenced when they go on their TikTok feeds and read all the things that they're reading?
Well, I mean, countries are always trying to influence each other, and and also populations are often paranoid and fearful about various things. And what we see is because the superpowers are engaging in great power competition again, the way that they have historically, and we're sort of moving out of a phase that was focused primarily on trade and investment. We're moving back into a phase of more heightened competition. Well, this means that those fears are better substantiated, and they will continue to grow. And that governments have a dual obligation. They have to try to protect the national security and protect their populations from outside interference and influence, but they also need to maintain economic growth and cosmopolitanism and the flow of goods and capital, and because they don't want to impoverish their people necessarily either, by isolating them and reducing the productivity of their industries. So there's there's a balance to be drawn here, and I do think on the U.S. side specifically, we see a new fear of China that has gotten pretty powerful. You see it in both political parties. Historically, it suggests that the U.S. could overreact. The U.S. is often sort of late to the game when it comes to foreign or global developments, and then it overreacts. And that's because the U.S. is insular. It's more focused on domestic issues. When it wakes up to a threat from abroad, it then sort of panics initially. And so this could happen in the case of China. The U.S. was sort of slow to react that the Chinese were not making the changes that were expected, and we're starting to become more aggressive in their neighborhood. And then when the U.S. does react, that can go overboard if both political parties are fully if they're sort of competing with each other to see who can be more hawkish or more punishing toward China. So I think that's a really key dynamic. But also in terms of spying or whatever, of course, all these countries are spying on each other. They're escalating their espionage because they're very paranoid about technological breakthroughs in energy and in other areas. Artificial intelligence and quantum computing. These things have enormous applications for industry and military. And China has definitely accelerated intellectual property theft and spying and attempts to basically break through on the technological barrier because they have this declining economic model. They desperately need technological breakthroughs, and they don't have the same open scientific inquiry that the West has that enables innovation. And so they're not sure that they're going to be able to generate innovation at home. So yeah, I think there's a lot of that kind of activity between the two, and there's a lot of distrust, and it's definitely going to continue to blow up at times and cause the relations to get worse and cause distrust to get worse. Again, the two countries would need to get together and diplomatically agree to resolve or reduce this problem, and they haven't done that.
I guess regarding the I guess the technology part of things and saying that obviously the West seems to be ahead of the game with respect to where China's at, leads us again to Taiwan and the fear that at some point down the road China could form a blockade, could invade, and we know that 90% of semiconductors are coming out of Taiwan today. What's your comment on that? Obviously, the world is trying to diversify outside of Taiwan right now because semiconductors, chips, the creation, the building of chips for everything, artificial intelligence is so important. What do you think the outcome is going to be there? Can you see a day or one day where China does go into Taiwan, or do you think that they will hold off?
Okay, well, first of all, Taiwan is extremely important for regional security because China has this long-standing conflict with Taiwan over the legitimacy, the rightful rule of China, and that's never going to go away. The Communist Party is not going to be content until they have either subjugated Taiwan or in some way undermined this threat to their leadership. And so that's just an ongoing conflict. The powers around them are concerned about the situation because, if, for example, if you're Japan or South Korea, your vital supply lines go through the Taiwan Strait or around Taiwan. And that means that a Chinese military power capable of seizing Taiwan would also be capable of interfering with those supply lines. And those countries also expect the Americans to uphold their commitments. The U.S. it abandoned its mutual defense treaty with Taiwan back in the 70s, but it has always said that it would defend Taiwan against the use of force by China and try to maintain peace in the strait through deterring conflict. And so the U.S. is sort of committed to that, and we see the president saying we would defend Taiwan, and President Biden has said several times we would defend Taiwan. Well, the Japanese and others would expect the U.S. to uphold that, and if the U.S. didn't, then it would be a loss of faith in the U.S. security alliance. So basically, what this does is it creates enormous pressure around Taiwan. And the Taiwanese people themselves, first of all, they don't want to give up their liberty, their ability to have elections, their democratic system. They don't want to give up their security. They don't want to basically trade away their ability to defend themselves. So they want to maintain economic and military relations with the U.S. and its partners and allies. So this just creates a long-term conflict, and the conflict can be delayed for a long time, but it's not clear that it can be resolved peacefully. One, because the Chinese are moving more assertively towards some kind of resolution, and their view of resolution is that they get full political and legal and military control. The other thing is, the Taiwanese people have seen what happened in Hong Kong, where they made compromises, and ultimately it resulted in the loss of their special privileges. So it's really not looking good over the long run. Short run, it really depends on the situation because China's not going to blunder into a full scale invasion of a mountainous island that is defended by the U.S. and Japan. That would be extremely risky, potentially disastrous for the Communist Party. So they're going to play a more calculated game and a longer game, try to get better energy security and their own semiconductors, try to diversify away from the U.S. dollar. But eventually, I do fear that it's moving in a direction of confrontation. Hopefully, a full-scale war can be avoided.
I guess my last question to you, and trying to ending off on a positive note, I guess, is there a way that both countries can forge a path ahead or forward to better relations? Is there a way that we could see positive outcome in the next, I guess, next few years? Obviously, we see this back and forth rhetoric on a daily basis, on a weekly basis. Is there a way? Is there a positive way forward?
Yeah, I mean, there's always a way forward. Hope springs eternal, and specifically with regard to politics, there's a tendency for those who did not know about geopolitics, once they discover geopolitics and the way that these nation states operate, they then can become very disillusioned and gloomy about the future. And I think there's reasons for that because humans don't have the best track record over the long run of avoiding massive wars. Remember, World War II happened despite all of the progress in civilization for hundreds of years. So there are huge setbacks for humanity that occur. But when we're talking about international relations today, nuclear weapons present this issue of mutually assured destruction. So the leaders of these countries don't really have an incentive to engage in direct full scale war. There's a perverse incentive there to have smaller wars or proxy wars because those don't threaten nuclear war. And so that does endanger their neighbors like Ukraine or Taiwan or other states surrounding these areas where there's a competition for influence and an attempt by Russia and China and others to create a sphere of influence. So I think there will continue to be proxy wars and conflicts, but there's not a major reason why countries would do desperate and disastrous things like fight direct wars with each other, these superpowers. And then in addition to that, we still see that China, of course, needs to create a more productive economy because they're no longer able to just grab the low-hanging fruit of export manufacturing or property construction. And so they're going to have to shift in some ways to create a more sustainable economic model. And the Americans are sort of hoping that they can use that as an entry point to negotiate a de-escalation with China. And that way the U.S. can maintain the status quo in the region, which is ultimately what the U.S. wants, having established that status quo after World War II. So I think what you're looking for is for China to move more in a direction of trying to stabilize their economy. And the very, very red flag, the big red flag would be if China has an economic, an even further downturn or even an economic crisis, and they do not respond in a pragmatic way to improve their economy, but they really double down on militarism and nationalism. That would be the red flag that we're really moving in a scary direction.
Matt Gertken, Chief Strategist from BCA Research. Thank you so much for being with us today and shedding some light on what I've been focusing on quite a bit over the last few years, the China-US relationship and how it affects and can affect individual investors and stock markets all around the world. Thank you so much for being with us and sharing with us your knowledge on this important relationship, world relationship.
Thank you, Alan.
Take care. Take care.
You too.